JB Cycles here with an update on January the 5th. I was expecting an ABC corrective move in the S&P, and although it started promising for bears with this A move, we bounced very much back up again with the B, and I thought this does not look very bearish anymore. Perhaps we could get a double low. And right now it looks that way. So let's clean up a little bit here, and I think we could see maybe something like this. So although my cycle here is quite bearish into say January the 20th, I think that is likely to be a higher low. Because after making a ABC move, and we are in the bull market, well, I'm not promising, there's no guarantee that this correction is over, but I think the odds favor it's over. But we have to see, and you have to make your own decisions here. Let's zoom out a little bit. Here is the 3.5-year cycle in red and the S&P in blue. And as we see, we are now in the caution part, the topping phase, and with dotted lines here I've shown generally what my main scenario is. I had signals for a possible bull market top around November, but then when we got to November and well, I didn't, and when we got into December, well, I thought more and more this does not look like a bull market top, and then the next candidate is February-March. We'll come back to that, but this is my general scenario for a topping now this winter, and we have some cycles backing up my scenario. So this is the 17-week cycle, and as you see, we are approaching a cycle low, but the market is not following this cycle perfectly. Like if we go back to the previous cycle low, you could call this a corrective ABC move, where the C is a higher low, and like this, it was kind of also an early low at this point. So yeah, we are very close to the cycle low, and time is running out for bears, and this does not look very bearish to me. So the next cycle top is around early March, and now I think we have to see, if we now begin a rally, how will it develop, because you could say nothing here when we have passed this cycle low. There's nothing here that makes us want to sell. But if the market does sell, that's a warning sign. That is what I call sabotage. And I have drawn a sabotaged scenario here in black, and the more bullish one in green. Well, a sabotaged move is what you often get in the middle of a downtrend, and then you get a bear flag. It's oversold, everything says you want to buy, but the market does not want to buy, and that's a warning sign that it's not time to buy, although everything says it should be. And at the same thing here, if now we have large market participants saying or thinking, yeah, this is a big major top, we want to start selling, we do not want to be late and sell in the middle of a crash. No, let's start selling now as the market still is in an uptrend. And actually that is what I'm advising my employer to do. We should now get out of the market the next weeks and months. And if that happens, if not everyone is buying this cycle, if market is selling this cycle, well then we should make a topping formation, and then we should see hard selling in March, April, and after that. So the VIX wavelet is saying the VIX has topped. The VIX should be going down. So actually it was a lower high in the VIX, and when inverting this and comparing for the S&P, we see the S&P should start going up soon. I had two projections from signals from the VIX, and as we see, there is still room for a move down here, a move down in the S&P, but time is running out. So this looks like a completed ABC, and we should rally soon. The other one, very similar. Yeah, time is running out for bears. You have the daily wavelets. Looking at the wavelets, we see we had an A with a yellow wavelet, B going up and C down. This is not guaranteeing that the C move is finished, but a lot points in that direction. I have this primitive tool here for finding market lows. I'm placing it at the wavelet top. And actually this one says we should look for a low in about 2 trading days, but this is not a precision tool. We are so close to the expected low that, yeah, this should be a low. If we are lucky, we could get a last drop down completing this, but no, I think time has run out. So what should we look for? Well, here is the previous bull market top. That one looked like this. So, a possible analog is that we are, well, around this point. So if we just compare, that would make us, that would be like this. Yeah. So are we here? Well, if we try to rally, but we can't, we get this sabotage, and we try once more. Yeah, that's when we get this impression of a topping formation. We can't establish a trending market. We're just going up and down and making heads and shoulders and that stuff. So yeah, let's see about that. I think I'm approaching. Yeah, this is the Dow Jones Industrial, the hourly data. So here is the original 2-week oscillation. I speculated, will it be disturbed by the Thanksgiving holiday around, I think it was around this point, but I really didn't see any clear disturbance. But here I started to wonder, is it like this? But no, I think actually, the 2-week oscillation is there all the time. It's not ideal at this point, but this low is at the expected time from the original oscillation. And looking at the wavelet where we are now, yeah, it looks it's not 100%. We could drop down here, but I think this favors, and this trend line, if on Monday, if we start breaking this, then yeah, it's go, it's ready, and that's, yeah, what I'm expecting. I think this is A, B, C completed, unless, well, my interpretation here, my guess is we should rally, but I don't think we will have a trending rally all January and February. I think it will be messy and a topping formation. So yeah, a double low with less bearish momentum, and this is for the Dow Jones, my general scenario, some kind of call it a double top, a topping formation completing around February, early March, around that time. Yeah, that's it, and see you next weekend.